Hello, welcome to FountainFX on Thursday the 10th of April 2014. Yesterday evening at 8 o'clock we had the FOMC meeting, and very much they discussed three key points that has got a negative reaction to the US dollar. Main reason being is that it shows that they're not likely to increase interest rates in the US for a while, and therefore that's had a negative effect on the dollar strength. So let's just switch over and have a look at the actual chart and see what impact it had on the currency yesterday evening. So when we take a look at the Euro US dollar on the 1 hourly chart, we can see that 3 days ago price on the left hand side reached this bottom, this low of the 137, from which in the morning with the European Open price started to push up, and we had quite a good run in price of 40 points on Monday. Then we had a consolidation of price over the Monday evening, Tuesday morning with the Asian session. Tuesday morning we had another with the European Open again. We had another push up of 60 points. Then consolidation over the Asian session. Price pulled back down around about 20 points for the European Open yesterday morning, where it then pushed up 20 points into this previous area of resistance, the 138.07, which if we go back, that's a significant area of resistance. But we could see that price, even though it did react from this area and pull back, it didn't break below this previous low from the European Open. So we started to create higher lows pushing up all the way up here. So we can see that that was actually a ascending triangle that was forming. And if we flick down into the 15-minute chart, so when we come back down into the 15-minute chart, we can see that price is using this trend line, this upward trend line, as its area of support, with the European Open price pulled down to it. And then we had a bearish engulfing candlestick pattern right here, showing that price wants to move in the opposite direction. Had we taken that trade, that would have been a 10-point reward, as price moved from the 137.85 all the way up to the 138.05 area, so pushed all the way up. So that was really it for the European Open, but then price continued to consolidate throughout the day, waiting for this news to come from the FOMC. How could we have traded this in the evening with the FOMC? Well, we could have just stuck a trend line across here and said, when the trend line's broken, we take a buy order, and price pulled all the way back down into this area, and then when it was broken, we'd have bought. We could have taken the view, which is the 138.07 is resistance, so therefore you place a buy. Once it's broken, it then turns into support, and you place a buy order here. Worst case is we would have had price went back down to 138.01 before it then rallied out on the negative US dollar news. And that's really how we could have traded, or the best we could have traded yesterday. So far today, what's actually happening? Price has pulled down with the Asian session. With the opening of the European market, we've seen some price rally, 20 points up. So it's another 20-point opener from the European Open. And we've had some data out, not a huge amount of data, waiting on some more as the day goes on. But due around about 1 o'clock is some more US dollar data, so we'll see what happens there. But price has basically got up to this 138.60, just above 138.63, and which you can see now it's starting to fall, just because it got into a previous area of resistance. If we look at the high, yeah, it's just got into that area of resistance here from the Asian session overnight. and it's starting to pull back down. I would still tend to say, despite that, it's an upward trend, so wait and see whether or not it creates a nice pattern, a nice bearish candlestick again, bullish candlestick, bullish engulfing candlestick. Let's see again this morning. So we seem to be getting good triggers in terms of the trend. Uptrend, buy on the pullbacks. You've got a doji followed by a bullish engulfing candlestick, giving us a buy order from this morning at the 138.43. We then got a bearish engulfing here, so get out at the 138.61, so 18 points of trade, and you're in and out. And you've also got the MACD crossing over, showing that there's upward momentum. So that's really Trading 101 from FountainFX today. Happy trading, and we will talk to you tomorrow. Thank you very much.